All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live pre-New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for all of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we can take advantage of in this Forex market as we head towards the end of the week and also towards the end of March, right? Almost through the first quarter already, which has been a topsy-turvy market so far this year, but we'll see how things go for the second quarter coming up. If everybody can hear me loud and clear, especially today, right, with all the sound issues, I actually had to change computers. So if everybody can hear me loud and clear, do me a favor, drop me a 1 in the chat, and we can get going with this morning's session. Okay. All right. So I think I'm good now. I apologize for that delay. All types of shenanigans going on this morning, but we persevered nonetheless. Let me get everybody switched over. All right. I think everybody should have control over their microphones. Let me get out of this screen so we can jump right in because we are already behind. Ryan, good morning, sir. How are you? Ryan might be still muted. Yep.
I was muted. My bad. I'm
It's all
doing
good.
well, man. Glad to be here. How are you?
Oh man, I'm doing great. Now that I got the situation fixed. So let's see
Yeah.
how it I'm back over on my other computer this morning. So who knows? So we'll see. We'll see how this goes. But glad to be here as always, man. So like we said, it's been a light week for the most part on the fundamentals front. Of course, we're seeing a little bounce in the markets because of the relief from the banking situation. People seeming, well, at least the sentiment is they seem to be getting things under control. Ryan, I saw yesterday it's a new CEO for Credit Suisse, right?
Yeah. They made that change. So it's going to be interesting to see how they adopt everything into UBS and make that switch to we'll see if they get them back into a positive standing and out of some of the stuff that they used to be doing.
Yep, for sure. So we'll continue to keep a close eye on that. But again, like I say, the market is starting to get a little bounce just on the sentiment, right? Moving more and towards a bit of a positive direction after the whole banking scare, right? So we'll continue to watch that. We do have, I believe we've got a lot of central bank members and things like that speaking on and off. We know we had Governor Bailey speak yesterday. We'll take a look at that and earlier in the week. We'll take a look at that. We see that today, right? So we had the this is marked as all day. So I had to try to get a beat on that one with the German preliminary CPI, but we do have final GDP for the quarter coming out for the United States, expected 2.7% growth. So we'll see how that comes in. And then we've got unemployment claim numbers. We got it here. So we've got Governor for Switzerland, Governor Board member speaking today. We've got FOMC member speaking as well. We've got Treasury Secretary Janet Yellen is going to be speaking. We've got Tokyo Core CPI at 7:30. So that's China. We got manufacturing PMI. We'll see how those numbers come out. Retail sales coming out of Japan, and unemployment rate as well. So that's it. Like we say, I say a fairly light week, but who knows? Whenever you get these bankers speaking, when we're looking at starting to see a little central bank monetary policy divergence between some of these countries, we'll see how that pans out. If we take a look at trading economics, we can see Spain, right? Inflation slows to a 20-month low. We can see the European stocks near a 3-week high, right? As a result of everything that's going on with the banking sector. But again, right, we continue to get, right, as this entire year so far, the mixed signals, right? Eurozone economic sentiment slightly down, right? Swiss business morale below forecast, right? Global China stocks rise on upbeat global sentiment because of the banking situation. So a little bit of back and forth, right? A little bit of back and forth. So jobless rate above expectations in February for Italy. We know that the ECB has a fairly hawkish tone in regards to rate hikes. Okay, so we know we're getting a little bit of divergence there between the euro and the United States in regards to interest rate decisions and things like that in regards to how much they're going to raise the rates by. So we got 25 out of the United States last meeting, U.S. Federal Reserve last meeting. We got 50 out of the ECB. So we definitely look for a continued upside momentum on that euro versus the USD. Kind of it'll stall, right, and retrace, but ultimately to the upside. If we come and we take a look at crude, right, as we look at the CADs kind of popping now, as we've got a little bit more positive sentiment, and typically your commodity currencies, your Aussie, New Zealand, your oil, things like that tend to do a bit better when you have that positive economic sentiment. So we can see crude futures were trading around $74 a barrel on Thursday on signs of a recovery in demand offset a smaller than expected drop in Russian supplies. The latest EIA report showed that U.S. crude inventories unexpectedly declined, right? 7.48 million barrels last week, the most since November last year. Defined expectations 0.092 million barrel rise. On top of that, right? So they were expecting an increase in the supply of oil, right, due to potential weaker demand, but it's the opposite right now. On top of that, a dispute between Kurdish authorities halted exports of around 400,000 barrels a day from the sea port in Turkey. On the other hand, it was reported that Russia's crude production has fallen by about 300,000 barrels per day, right? So supply down, right? If demand is up, you got a rise in oil prices a day in 3 weeks in March. So yeah, so we'll continue to watch out for that. I want to take a look at on the Forex, right? When we look at the pound, right? So we can see here, March 23rd, at the government, back on the 23rd, after the Bank of England Governor Andrew Bailey said on Monday, right, this is a while ago, that further monetary policy tightening would be required if signs of persistent inflation pressure become evident, right? He also said that there were big strains in the global banking sector, but added that banks in Britain were resilient and able to support the economy. Last week, right? This is a week prior, when we covered that, right, where the central bank raised rates for the 11th consecutive time to 4.25% and left the door open for more rate hikes should inflation persist, right? So because, right, Britain's inflation unexpectedly accelerated to 10.4% in February, right? So we'll continue to watch the data on the pound and the euro versus, right, the U.S. Federal Reserve. So that's it for right now on the fundamental front. Just starting to see that shift in monetary policy in regards to rate hikes and how aggressive, right, some countries who are playing catch up are starting to starting to become versus the United States, who was out ahead for quite some time. So that's the monetary policy game, right? But hey, like we always say, we just need the market to move up and down, right? We need the volatility. Ryan, anything else to cover on the fundamental front before we move in?
No, sir, you covered.
All right, appreciate it. Okay, so let's go take a look at the DXY as we continue to look at this crown pattern play out to the downside, right? So it's been a bearish week, but you see not a huge move. It hasn't taken out last week's lows. So we're like bearish to neutral right now on the dollar, right? Has some decisions to make, okay? So it's nice bearish push to the downside, but now we're kind of stalling out, moving sideways. So sometimes that could lead to some tough situations in the market when the dollar wants to move sideways, but we'll continue to watch it, right? We'll play what we play. And if there's nothing there, then there's nothing there, right? So that's the US dollar. And that is the crown pattern, right? The crown pattern. Now we had we had some questions, right? So we got inboxed about, more about the crown pattern since we have it on the dollar. And then, Ryan spots them quite frequently for additional confirmation on potential reversals, right? Because at the end of the day, it is a reversal pattern. All right. So we're going to start this morning off by talking about that crown reversal pattern, because we see it a lot of times in trading, especially as more people become accustomed to trading, when people are learning, when people learn, they develop a passion, just like us, to teach people. Some people have been doing it for decades, some people are new. But what we always say is, when it comes to trading, outside of a lot of the things that's going on with algorithms and stuff like that, there's really nothing new under the sun, right? The market is primitive. It moves up, down, and sideways. It has classic patterns that develop no matter what asset class you're trading. And the crown reversal pattern is one of them. Is one of them, right? And it's called many different things, right? Some people will call it crown. Oh, it's like a irregular head and shoulders, and things like that. But it's a pattern on its own, right? This is what we see here is not a head and shoulders pattern. You don't have an equal neckline, right? Okay, and I'm sticking to basically fundamentally the way we were taught in regards to classic chart patterns, right? So this purple line would be a neckline right here at this low. You don't have an equal low there where price held and reacted and moved back to the upside to form a right shoulder. You don't. Can somebody tell me what happened there in that situation? We didn't hold here. What happened?
Broke support.
Broke. Thank you so much. It broke support, right? Then it pulled back above support. So it didn't hold that support, forming that neckline. Okay. So when you have this classic pattern pulls back, that has been it's called a lot of different things. A lot of people are training on, ICT and things like that these days, order blocks, the whole nine. You may hear all the different lingo, but at the end of the day, right, you can see that this is a crown reversal pattern, right? So it's called many things. The key is that this has been around since forever. Okay, it gets marketed and repackaged as many different things, but it's a crown reversal pattern. All right, everybody clear on that? Please drop me a 2 in the chat, because you're going to see it out here presented 50 million different ways, and you'll have people that'll market it, and it'll be like the thing, right? But this is just a classical chart pattern, right? Where price breaks support, right? And then it pulls back. Okay, and then it pulls back in reversal zones. Okay, and we'll go more in depth right here in a little bit. We'll take a look at let's look at this CAD yen, because there may be some things setting up here on this CAD yen since we're getting that pop on the CAD. As a matter of fact, I'm gonna share this article. I totally forgot about this, right? Article from Reuters this morning talking about the Canadian dollar. I'm always looking for new news, right, to stay informed. So I'm going to put this here in the chat since I didn't cover it in the beginning, so y'all can read that this morning. Okay, on the CAD. That's out of Reuters. That's another source, right, that I like to use in addition to the Financial Times and other stuff like that. So, so that can everybody see that drop me too, where that low was taken out? We've had higher highs and higher lows, then we've got a reversal. Okay, we've got a clear-cut reversal after that pullback, right? So let's talk about it. Okay, let's draw it out, and then we'll look at like that CAD yen. Because when I was redoing all my charts, I had noticed I did not put the CAD yen back in there. So we'll do the CAD yen together because there was a nice reversal pattern that formed on that. So let's take a look at this, and we know everybody cool going over this, reviewing this? Drop me a 1. I know we got some veterans in the group, but sometimes it's cool to just go back to the basics, right? Go back to the basics, right? That's what it comes down to, okay? So, you know, a lot of times if I'm having a challenging week or a challenging month or a challenging quarter, I go back, right? In addition to erasing all the charts and remarking them up, you take a deep breath and you go back. So if you ever find yourself in that situation, always go back to the basics, right? Go back to the basics, start all over again. So I want to make sure we cover this since we had the question. I thought it was an excellent question from one of our newer members. So we know that this market, we're going to do this in an uptrend, right? So we make higher highs, okay, and higher lows. We know that's how we identify an uptrend, okay? One of the classic things that we look at when the market is trending to the upside, here's a high, we get a higher low. Why is this part right here about to be a higher low? Because this was your previous low, okay? And then we move up and we create a higher high, like so, okay? We come down, right? And we create a higher high, like that. Okay? Basic fundamentals, right? Now somebody tell me in the group, right? I need participation today, right? So somebody tell me in the group, how do we identify a high, right? We're using a candlestick chart. How do we identify a high? Somebody tell me that, a swing high.
5 candle formation.
5 candle formation, right? Okay. How do we identify a swing low or support? Candle formation. Awesome, right? So then we say, hey, we like to, oops, sorry about that. We like to draw out our trend lines, right? And we say we take it from the low. Okay. Do this thing today, like this. Okay. So if you're an uptrend, I like to use my counter trend line like this. Boom. Okay. Like so. So we're making higher highs and higher lows. Everybody see that? Right? That's the market, right? And that's how we get those ABCD waves, right? So we move and come to our label and we say, all right, this is how we get those, right? A, B, C, D. Right? So in essence, okay, we create a low. Think about it now. Okay? And sometimes you got to work. You got to draw this out yourself, right? When you're on your own, draw this out yourself, so that you get the right visual that you need, right? So that's a low of support. This is a low of support. This is a high of resistance. Past resistance becomes future support. We got that. Drop me a 2 in the chat. Come on this morning. I have my coffee. Let's go to work. Let's put in some work. Okay. Let's put in some work. Let's not sit there silent. Right. Let's get it going. Now, so we're moving up. Okay. So we have formed a new high, right? We have formed a new high, right? So let me go back for our newer folks, right? We get an ABCD wave, okay? Completion. That D represents potential exhaustion, right? And now look, our C becomes our new A, our D becomes our new B. It's the reset, right? And we got a new C, and we got a new D. Okay. Just like that. A, B, C, D, A, B, C, D. Okay. Is it that smooth? Of course not, right? It's an illustration. Right? It's always perfect in the illustration. But in regards to the price action, right? In regards to the price action, ultimately, when you get a good uptrend, you get that C to D move. It can consolidate in between. It can do all types of stuff, right? But ultimately, it hits that D extension, and then we reset the game. Okay, look at that now. Right? We want to make sure we're clear. Okay. Now, in order for this to be considered, right, just on price action, support and resistance, in order for this to become really, right, we have a low of support, right? We identify it as a low of support by having a swing low, right? 2 candles to the left, 2 candles to the right that are higher than our center wick low, right? That gives us support, right? That means, hey, this past resistance level was respected. It held as support, and now we moved up to our C to D push zone. Okay. So when you look at this, you say, you know what? I'm in an uptrend. So if the uptrend is going to maintain itself, right? We expect it to come down. Past resistance becomes future support. And we know that support and resistance is never just a line, it's a zone. And then we say, hey, if that uptrend is going to continue, it's going to create new highs. This swing low here is confirmed as a low, like, hey, if we want to look in the past what the last previous low was, it's confirmed by what? Price taking out this high, right? So when price takes out this high, now, you know, this was my previous confirmed low. Right now, that's etched in stone, right? And the reason why I say that is because of this, right? If price comes here, right, and then reverses out, see, that just got taken out. So now I have a low there, right? So it's when this high gets taken out, like so, right? Okay, that was my last confirmed low right there, right? So now we're moving down, see, like this. And then if we're going to continue, we're going to move up. We get that concept. We got this, right? So we got that. But there comes a point in the trend, right, where things, whether it's for a deeper correction or a trend reversal, right, like we saw on the DXY, like we call out all the time in this group, we have been since last forever, right? You have it where this trend line will break. This trend line will break, and we know we draw trend lines. Why? It can help us determine direction, speed and momentum of the market. Okay, speed and momentum of the market, and also potential entry points, right? So if what I mean by direction is we're making higher highs and higher lows, we add the additional confirmation across the lows with the trend line, we're moving up, right? We're moving up. If this holds, what we mean by a potential entry point is that if this holds, okay, that could represent a potential entry for us, right? Here. Like that. That could be a potential entry, right? As a matter of fact, we can talk about that with the fibs all the time trading, with the trend, boom. And we say what? Put the stop below the A, right? And if it doesn't take out the A, right? So if I'm running my stop, like so, and we say as long as it doesn't take out the A, it has no choice but to go our way. And you say, Benny, what A? What are you talking about? Well, because when we have an ABCD pattern and we complete, our C becomes our new A and our D becomes our new B, just like right here. Okay, when we go back. Okay, nuts and bolts today, everybody. Right? So look, A, B, C, look here. A, B, C, D. Our C becomes our new A. Our D becomes our new B. Here's our fib. A, B, C, D, right? Okay. We get it. That's how we draw it up. Stop below the A. And if that trend is going to continue, it's going to run to a higher high. Okay. So we got that. So that's what we mean by entry. Speed and momentum of the market is, right, if price is accelerating up, right, and we run into a D extension or level of resistance, and then it starts to move to the downside, right? Well, that represents what? A slowing in momentum to the upside. Okay, back down to this trend line. Okay? Sometimes, right, we have it where we just get a shift in momentum and we just have a new trajectory. Still moves up. That's why that's what we're talking about today is very important, because price can move down, break our trend line. See here? Okay. But then the momentum has just slowed to the upside, which is temporary. And then, right, we just get a change in trajectory and how we're moving. And then that can just continue to move up, right? Right? And that's where we kind of get, right, that channel. See that? We're just going to teach you what we've learned years ago this morning, everybody. Okay? Not a matter of right and wrong or style or this is the be all, the end all, or it must be like this. We're just sharing what we've learned and passing it on to you. Okay? Take it and run with it. All right? So, now, you do have a moment where this market is exhaust, and no matter what the time frame, daily, 4 hour, 1 hour, whatever, this wants to correct, to make a larger correction to the downside, right? So we got an A, B, C, D. We expect to continue, but it doesn't, right? The momentum slows, and we like to say number one. Okay. All right. Now think about this, right? What we're covering. All right. And then what's out there going on, and see, right, that no matter what you call it, no matter what the style, is all similar in nature, and it all has a foundation, right? Okay. So number one, okay, when we look at this crown reversal, this is going to be a bearish crown reversal. We're going to see one, price breaks the trend line. All right. It breaks the trend line. Okay. So let's take one, price breaks the trend. Okay. Breaks the trend line. Okay. Number two, price takes out the A, right? Why? Because if this is an ABCD move and we just created a new high, say we hit our extension and we created a new high or a major level of resistance, that new high confirms, hey, this was the low, A, B, C, D. Our C becomes our new what? Our new A, right? It becomes our new A. Right? Becomes our new A. Everybody follow me on that? Drop me a 3. This is very important. Because this was the low. Okay, the confirmed low. Confirmed not only by a swing low, but the new high, right? That new high. Okay, so look. We've taken out this A. Right? Now, people call that a sweep, liquidity sweep, whatever you want to call it, right? Whatever the new lingo is for the day, week, month, quarter, year, decade, whatever, right, is the same, okay? Now, it's taken out. So 1, 2, price takes out the A. Okay. Because it doesn't have to be so complex, right? It's a really simple concept when you get it, right? Especially when you develop the spatial intelligence for it, okay? So when that happens, okay, number 3 is you want to identify the left tip of the crown. Left tip of the crown. In essence, somebody tell me what that is. What does that represent? A past level of what?
Support.
Resistance,
Oh,
right?
resistance. Sorry. Yep. Resistance.
Yep. Yep. Carolyn, I see that. R beneath R. Yep. Appreciate it, everybody. Right? Past level of resistance. So you identify the left tip of the crown. Now, this might be called all types of stuff. Order blocks, fair value gaps based on the candles, the candle formation, right? And the track of the candle, previous 3 candles or whatnot. But it's just step 3, identify the left tip of the crown. That's what it is, okay? 4, identify, I'm sorry, I wrote that in there. 4, because it's the number 4, remember that, because it's 4C, like, you know how people say, we can foresee the future. 4C, the right tip. Right. So typically, everybody, right tip of the crown. Okay, everybody follow me closely on this. Right? 1, price breaks the trend line. 2, price takes out the A, the low. Right? 3, identify the left tip of the crown. 4, 4C, the right tip. 4C, the right tip of the crown. Right? Well, the tool wasn't that I need, but oh well. Right? So 4C, right? So we're going to look forward, right? Because the chart moves from left to right. So we're going to 4C, 4C, an area, a potential area where price may hold and we get a continued downtrend. So like this, okay? I am interested now. Oh, here we go, sorry. So we're going to foresee, right, the right tip of the crown. Bang, somewhere in the zone, right? You're welcome. You're welcome. That's it, right? So you got the low taken out, trend line break, A taken out, which is the low, okay, confirmed low, right? They call it many different things. And then we pull back, okay? So what we like to do at that point, because typically everybody, when price takes out this low, when it reverses, typically what does it do? It forms a level of what? Right? It slows down. Before that reverses, it's typically going to form a level of what? Support. You guys are right on it. Okay. So what that enables us to do is that Ryan says it all the time. Hey, when your A gets taken out, flip your fib, right? Flip the fib, right? So if this is going to reverse, look what we can do now, because we have this high. We've pushed out, we've taken out this confirmed low. Guys, look. Okay. Now it's just a matter of my trade plan and what levels do I like to trade. So where some people may say, hey, this fair value gap, or this one is better because this one is higher up. We just use the fib. We use support and resistance, previous structure, support and resistance to try to line up to give us confirmation. And then, right, we look to enter. We put our stop, right? So you'll see it all over the net. You put your stop above the high. We put our stop above the A. That's the stop above the high, right? And then we get a pullback, a continuation for the C to D, right? And you can set your targets. It's no different than what we already do. So now, okay, I have because the A was taken out, what do I have? I have an A, B, C, D. And you can adjust your targets, right? So we always say, hey, I could take some profit at the B low. Okay, maybe I want to take some profit there. Okay, some people may say at the next level of structure. Yeah, it's structured, because in order for us to have a B boundary, everybody, we have to have a swing low. That's a support level. That's structure. Maybe we want to take some money at the 127 in that zone, because we know regardless, you can get a reaction there. And then at the D extension. Right? That's a crown. That's what it is. The key is, no matter what folks may call it, is to recognize it. Questions? Price action patterns are amazing, Carolyn. That's what that is, right? So if we come and we take a look at the US dollar. Okay. Do crowns, do they fail? Absolutely. All price action patterns fails. Everybody at peak of billionaires, right? Do they always make it back to that left tip? No, right? It's a projection, right? It's a projection. Okay. Right. But you see where it ran into structure. Okay. Weekly level of resistance. Okay. Weekly level of resistance, right? So here's the next level here, that 12,601 weekly level. Look right there. See? Okay. So if we go and we take a look at something like this CAD yen. Right. And we'll just mark this one up, right, for good measure, just like we always do, right? So a couple lessons in one. So we'll mark our levels. Okay. We should have this down now because I know on the weekends we're doing all of our charts, right? We're watching the trainings in the back office, making it happen for yourself, because that's where the true freedom is, right? So here, we're going to just use Smart Trader. Excellent tool. Make it easy, right? Make it easy. Smart resistance, smart support. All right. It's good training. Helps you to develop an eye for price action. There's a monthly high. On this CAD yen, here's a low. Okay. I'll even take this one. Okay. Bit of a zone. Go down to the weekly. Okay. And you can see how we've double bottomed there and we're moving up. So our top-down analysis is very important, right? Right now, this level is holding and we're having a bullish week. Okay. Because we want you all, right, as a group, we send out trade ideas for potential trade ideas, and hey, you learn and you put your own confirmations to them and things like that. But what we also want to see in the group is your trade ideas, right? We want you to develop your own trade ideas so you can have the ultimate freedom and don't have to depend on anybody. That's the goal. Something to think about. Okay. So here we are on the daily. Okay. Look at that. We're just going to look at this price action right here and we see how this is react. So when we come into levels, key levels, okay, when we identify and we say, oh, this did not break out, this came right back down. And we got another classic formation, which is pretty much a double bottom in the zone. And we're moving up off of this. I know that on the lower time frame, when I look at this leg moving down and it's coming to the support and reacted, you can already see I've got a trend line break. Okay. All right. So let's mark daily support and resistance. Okay. So we can mark it out. Okay. Again, I marketed lines simply because of the aesthetic. I just like to keep my charts clean for the most part. So I just use lines. I know it's a zone, right? I can look left and see that. Okay. So here, there. Okay. We'll even take this double bottom down. That's easy to see, right? We see that. Right? Go back in the past, way back in the past, right? We see that price is held right there. Okay. So we know for right now, this has been bullish. This has been a bullish move and a reaction. That's a good trade, right? So if we come down to the 4, we can mark our resistance levels. But we've seen where, right? So even though we have Smart Trader and this awesome tool, and it marks out the levels for us, it finds those swing highs, right? 4 hour, I use purple, okay? 4 hour zones like this. We still have to be able to identify these swing highs and swing lows ourselves. Why? Because we always say that the best indicator in the game is your own 2 eyes, right? So if we come down this side where we see this impulse move, okay, to the downside, they take these resistance levels out, okay. We see where price pushed down, came into that level and it reversed, came right down into our box, okay, and it reversed out. But where are my previous levels of resistance? Well, it was one right here. Took it out, didn't it? Here, took it out, didn't it? Here, took it out. And that's where we draw in the past, where you see us draw the staircase, right? Drawing the staircase. Okay. Right. We know a lot of people don't get to go through the training based on the watch time hours that we see, and we get it. So we're just going to do it right here. Price likes to climb the stairs. All right, we get it. We get that, okay? So that's that, right? It's breaking, it breaks a level, okay? It breaks through levels. At some point, it likes to pull back and retest those levels or those zones, okay? Climbing the stairs. So here we are on the one, all right? I came down here just to get a clean the picture after doing that. So we see from the higher time frame prices coming to a level of support, we can anticipate a potential reversal. We don't go through the wicks, right? We take it from the high, we pull it out, we bring it down until it touches. We need a second touch. We can see that that second touch is way up here. We don't go through the wicks. This is how you develop your inner, outer, and long-term trend lines. 1, 2, straight through. Bang. That's how you draw a trend line. That's our philosophy. Whoever you decide to listen to, it's totally up to you. We tend to stick, right? If I invested in my education, I'm going to listen to the people that taught me, right? So this is what we're sharing with everybody here. We draw our trend lines on top of the wicks because what? That wick, it represents, depending on the direction you're trading, it represents a high or a low in the price action for that particular time period, right? Okay. Open, high, low, and close. 4 parts to a candle. All right. So we respect that. So we take it from that second touch, pull it out. We come straight down till we get the second touch. 1, 2, straight through. Just like that. Okay. We want to try to work ourselves through the lowest point. Okay. The lowest point of the trend, right? In this case, to the downside. 1, 2, straight through. Here was the second touch. This and this didn't exist yet, right? We're going back in time. So 1, 2, straight through. Bang. Okay. Here, here. We need to work this through the lowest part of the trend. Here's the touch. Bang. Okay. Everybody follow me on the trend lines. Drop me a 4 in the chat. Awesome. Here's this low. Look, boom, low, right? So that has to be, right? Now it's moving the opposite way, right, of the example we used, but we're bearish, we're flipping for a bullish crown. Here is the previous confirmed high. It took it out. One, price breaks the trend line. 2, it takes out the A. 3, identify the left tip. 4, C, the right tip. Right? So up to you what you want to use. Traditionally, when you do a chart pattern, right, like this, you take the fib, you extend it to the high, to the low, right? Some people still like to use the smart fib. That's cool. If you use the smart fib on this, it's probably going to show a deeper correction. But at the end of the day, it comes in right here, okay? So like this, right? If you use the smart fib, looking at the smaller waves, that just gave you an ABCD wave that pulled right back to a 61.8, just like that. That's the reversal pattern. So we draw this again, okay? One, price breaks the trend line. 2, price takes out the A. 3, identify the right tip of the crown. 4 is for C. Oops, my bad. Left tip of the crown. 4C, the right tip of the crown. And number 5, draw your counter trend line. Okay. Like so. Hold on one second. All right, I'm back. Sorry about that. So there we are. That's your crown reversal pattern. We're now making ABCD waves to the upside. Okay, so everything comes together. We now know that we are in an 80-20 zone, which is why we have no fear in trading it. So this is what this looks like when we draw it up. Here is our 127. This is our 118. This is our B boundary. So here's our zone. Here's the zone for these 80-20 plays, which is counter to trend. We know that price likes to correct. Well, how do you know that, Benny? Well, you never know for sure how deep it wants to correct. But if we just look at the previous vid, we saw that it corrected, right? So now, here we are. Here's the zone. There. Do they all play out? No. Why, Benny? Because in trading, you lose trades. Period. Now, you can place your stop where you want to. If you use a wide stop, right? I like to put it at that D. Why? Because if it doesn't take out the D, it's going to correct. If it doesn't hit the D extension, it's going to correct. Right? If I come up here to my zone, right? So we were here, 80 pips, 130 to the 382. That's a positive risk to reward ratio, right? If I wait for that maximum entry point, that's a positive risk to reward ratio, okay? Now, ideally on those C to D swings like here, yep, we love it, right? Because it can put us in, if we put our stop below that A, it can give us, right, that 61.8, that was perfection, right? There, what is that, 60 pips or so to that D extension was 172, right? So we're getting up around that 3-to-1 type of scenario. But when these counter trend trades, right, I just need a positive, right? Now, if you want to run your stop loss tighter to try to get a better risk to reward ratio, that's fine. Or you can widen it and let the market just do its thing. So here we are. Okay, stop there. You can put your stop above the high, whatever you want to do, right? But this is what we send out. Okay, when you see this stuff come through in the Discord, it's important that you know the thought process, because oftentimes I'll ask, anybody take this position? And I get crickets, right? So whether you take these setups or not is totally up to you. But even when it comes to your own trading, right, and you find these setups yourself, eventually you're going to have to find confidence to take the trade. Okay, you're going to have to find confidence to take the trade. Okay. We know it's psychological. Why? Because we have people who send in demo accounts and you ask them, did they take a trade with fake money? And they still didn't take the trade. I know, because I used to be one of those people. Okay. So this is what we want to see happen, right? Eventually, we want to see this move make its way down, right? We want to see, so whether you say, Benny, well, the way I was taught is taught to trade with the trend. That's fine. You know why? Because you still need this to come down to a low price, right? You still need this to come down to a low price. Whatever you determine in your trade plan as a low price for this to continue. But in the meantime, this is where we are with the price action. Okay. So that's a potential swing. If it swings and takes out your high, if you have your stop above the high, guess what? You lose the trade. So what? You had a 0.5%, 1%. We got to get over that. We got to get over that. All right. If it takes out your D extension and you lose the trade, it still should be out 1%, 0.5%, 2%, because you calculated your risk before you took the trade. I don't know how much more clear I can be on that, right? So we need, if we're playing this 80-20, we need this to come down and smack that 382 at least. When you get to this point, you can either get out the trade, take half off the trade, take 75% off the trade, let the rest run, try to get TP2. If it's going to continue down, it'll take out this A. That could be your TP3. Like that, right? So this becomes my TP1 for this counter trend trade setup, right? This here is my TP2. This is my TP3. Like so. Okay. If it reaches there and takes out that A, right? We know sometimes it can come down and it can double bottom and take off, right? That's just the price action. Okay, can't control that. Okay. Now, that's the setup. That's support and resistance. That's the crown. We did a bearish crown in an example. This is a bullish crown formation, right? We learned today, right, that it's called a whole bunch of different things. It's repackaged and remarketed and resold. But at the end of the day, right, it's all in what we teach. It's all in the back office. It's all in the training. So that's the lesson for today. Any questions, anybody? Any thoughts, comments?
I thought this review was fantastic. Thank you so much.
You're welcome. Appreciate the feedback.
Thank you, Benny.
You're welcome. Carolyn, scare money ain't make no money. Right. Right. Ryan, anything to add before we wrap things up, sir?
Man, masterful session. Masterful session. Michelle, it's scary.
Yeah,
it is.
Scary.
It is. It is, right? But the thing that we have to do is address the fear, don't run from the fear.
Yeah.
Right? And the way we address the fear is, one, identify where it comes from, but two, in that demo account that Ben was talking about, take the trade.
Yeah.
A lady by the name of Susan Jeffers, she wrote a book called Feel the Fear and Do It Anyway. Right? Feel the fear, acknowledge it, right? No, I'm not scared. No, it's scary, right? Because it's different.
Yeah.
But then do it anyway. Take action. The action is the only way we're going to be able to move past those fears.
That's true.
The action is the only way we're going to be able to grow. So feel it, acknowledge it, journal it like we talked about yesterday, where it comes from, when you feel it, right? Because then you can build guardrails into your trading plan to address it in the moment and become better at addressing it in the moment, but then take action. That's how you move through it. And over time, the more you move through it, the less scary it'll be, because now you're building new habits. Because again, the fear comes from, it's different. So you build new habits based on that fear that you're taking action on. Now that becomes normal to you, in your body, in your mind. This is what I'm supposed to do. So now that fear is minimized, you still may feel it a little bit periodically, and that's okay too, right? But now you have a process to address it, and you can move through it. We
Thank
got to
you.
move through the fear.
Yeah.
Right?
Yeah.
So open up that demo account, feel the fear, and do it anyway.
Okay. Thank you.
You got this. That's it, bro. Great session, man.
Well said. Well said. Appreciate you being here, everybody. Thanks for hanging in. Thanks for all the participation on what I know is an early morning for a lot of us, right? But really, really good session. So Ryan, the session tonight?
Yeah, tonight we'll be canceling the evening session this evening. We'll be back at it Saturday morning, 7 a.m. for our weekly ritual.
All right. Appreciate it. Right. So we'll get a communication out on that. But that's that, everybody. Have a good rest of your day. Bye for now.
Have a fantastic day.
Thank you.
All right, thanks,
Appreciate-
man.